James, no problem. Honest mistake. Good morning, good morning, good morning. Okay, we are live. We are recording. All is good. Welcome, everybody. Hope everybody had a good week so far. Robert, I shared a screenshot of that video you sent me. I did verify it first on Solana's Twitter channel. So yeah, it's good news. Thank you for that. Let's see here. It's so strange, guys. We got a lot of good news, a lot of catalysts happening in the markets right now that should and would normally cause crypto to just be shooting up, and it's not. So people get all freaked out and they're like, "Well, I don't understand. If all this good stuff's happening, if Bitcoin's doing this, if XRP's doing this, and blah blah blah, why aren't we moving? Why aren't we going up?" And the inflows are in the billions. Just so you know, it's just that. It's coming out of one pocket and going into another right now. It's not coming off the major exchanges. It's not coming out of the retail pool. And therefore, it looks like nothing's happening. It causes discouragement. It causes the people to get, oh, this is just it's all hype. It's nothing's happening, but it's happening, guys. It's happening behind the scenes, and drastic things are going to change. Um, that is And the people who benefit the most when that happens are the ones who have just had what we call diamond hands. Have you heard of that term in the crypto world, diamond hands? It basically means you are strong, hard, steady. You're not freaking wishy-washy. You're not jumping in and out every time the market moves. You are holding tight during all of the turbulence, during all of the ups and downs, during all of the news and hype and negativity. Those are the people that end up gaining the most. Just think of the people who bought, 10,000 Bitcoins when it was $2. And look at all the ups and downs. I mean, Bitcoin went all the way up to 68K and all the way back down to 15K. Before that, it went all the way up to 19K, went all the way back down to 3,500. Imagine holding through all that. Are you guys seeing closed caption on my screen?
No.
Oh, that's just the YouTube. I got the YouTube. I got the part that I'm recording on the other screen, and it's showing captions of under the screen on my words.
Wow.
Let
Live.
me
That's awesome.
yeah, let me see. Let me just close that out. Yeah, it looks like this. Whoops. I don't know what just happened here. You can see the words on the screen up here when I talk.
Wow. That's great. Technology's gotten so awesome. It's like Star Trek, man. We live in Star Trek for real.
Right. All right. So what is going on here? This is Bitcoin still in downward trending channel from the all-time high. Not much has changed day to day, but we were peaking out of it right here. We did have a couple wicks that went out of it, and we thought this might be the time because we have a nice upward trending support from the bottom of the downward trending channel. I mean, we didn't have any touch points since way back here. Now, it depends. If I take this and I move this up to here, could do that too. It's widening now, a widening channel on the way down. We had a couple touch points up there. But if I go from, let's say, oops, if I go from over here, or I like that one better. It's because that reminds me of this falling wedge. You see the double top here when we hit 124 and then we come down and hit 126 and then fall. Back here, we hit 108. We came down and came back up and hit 109 and then fell. This is a falling wedge. I could even go further than that. I could take the downward all the way from the previous. I don't know why it's moving that whole line like that. That's strange. Falling wedges, but I think it's more accurate over here. But it's very similar to this one. And generally speaking, guys, double tops usually drop, double bottoms usually pump. So are we going to have a double bottom here? Are we going to break out? This is the horizontal resistance, and this is the upward trending support. And this little formation is bullish, and usually it will break to the upside. But when I say that, just remember 70% of the time, something does something means that 30% of the time it doesn't. And when you look at the 30% of the time it doesn't, it's usually when it's up against major resistance or up against major support. Like a bear flag, for instance, a bear flag that would be right here, let's just say, up against major support, coming down and hitting this support and creating a bear flag is likely to break to the upside rather than the downside because it's up against support. Normally, a bear flag would break to the downside, but this is up against major downward trending resistance. This normally would break to the upside. Some people could say this is a bear flag, depending on how you look at it. If you look at it that way and this way, inside of a downward trending channel, which normally would break to the downside. And if it does, how far can it go? That would bring us down to around the 70 to 72.5 range, 73.8, which is this zone right here. And if I take this downward trending support and just continue it down, yeah, that's what's going to happen, guys, if it breaks this upward trending support. Okay, and let me just bring this screen over here and show you from my other chart. We are in this upward trending support up against horizontal resistance, and we are also at the same time, look at this, boom, 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 boom. This is the overall upward trending support on Bitcoin going all the way back. If I go up to a higher time frame, you'll see that white line is going all the way back down to the bear market bottom here. And we went through it and we're retesting it. So we have to break to the upside. We have to break to the upside of this downward trending resistance and this upward trending previous resistance, which is now, previous support, which is now resistance, in order to get back in the game. We got to break these two things right here and get above. Break this orange line to the downside and this white line and to get back into this upward trending channel. And only then can we really climb back up. But if this, guys, this is major previous support acting as resistance right now. Now the problem and the good news is that we are banging on it with multiple touch points, which is usually bullish. And this is technically a bullish type of situation here where we have horizontal resistance and upward trending support. The upward trend usually breaks through the top resistance, but it's not only up against that resistance and this resistance, but also this resistance right here, all culminating in the exact same point. You can speculate and guess and bet all you want, but that's a lot of resistance. And we're at 90K. If we break this, if we break to the downside, then, we could just be coming back down to this level right here, which is the previous major support. And before that, it was major resistance. And here before we broke out. And however, the good news is that if it does break and go that low, that is probably going to be a great entry for a double bottom. Like probably the best it's going to get, unless it breaks below that. Okay, so if it breaks below that, then we're talking bear market, and we're probably talking in the 60s for a bottom. But And that could, bleed into next year. But, we got a couple weeks left, obviously, of this year. If we go to, uh, if we go to, let me just pull up another chart here. Let me go over here to Trading View. Yeah, I mean, things could get ugly if we break this 70K range right here. And it is trending down towards it. It has not broke out yet, but let's look at these two falling wedges right here and compare them because there's a lot of similarities. This one did come down to that support before breaking out. It was a few $1,000s lower, but so if we take this support, because there was support here, right at this 81K range, there was support there. It's just a couple wicks down below. Most of the support was there. If you look closely, we had support, wick down, support, wick down, support, wick down, resistance, and then broke out. So this 81 was support and resistance. And it actually, if you go back even further, it was resistance here too, before the breakout. And it was support here before this little upward trend. So there is a little bit of support before we get down to this level. And so if we break this to the downside, I would say that double bottom would be 80,500 to 81,000. That would be possibly a good area to break out from. But if it breaks through that, guys, then we're going down to this zone. There's really no way around that. Now, the other option is that we just break out here. And it's trying. It is trying. Let's look at some other indicators here, see what's going on. We do have a red dot on the daily on market cipher. This is not good, but we did have a big red candle from it already. But the money flow is looking like it's going to start flowing out to the downside. That's the daily. Let's go to the weekly. On the weekly, we have a green dot and a big turn in money flow, obviously curving back to the upside. And usually when we see that down here, down in this level, down in this range where this white line is, let's just look. There's usually a big pump to the upside. Just look at when I put my pointer on the green dot, look at the white line, the dotted line going straight up. Once we get down to this level. So this could be a pump to the upside, and it may not be the one that takes us to the top, but it could be enough to break through. So it could be enough to break through. Look at these wicks. Look at these wicks right here on the weekly. Anybody want to tell me what these wicks indicate? Trend
Decisiveness.
reversal. Trend reversal. That is a Doge candlestick, usually indicates a trend reversal. And the trend is down. So the reversal would be up, right? So now if this green dot does what the previous green dot like this did when it got down this low, which was this one right here, when it got under that line, you can see we had a nice pump to the upside, but it was still a lower low. And this was in the last bear market. I mean, this was before we dropped to the bear market bottom, but it was a nice pump to the upside. And that was approximately a 40. Oh, wow. That's a 45%. That's a big move. That was from 17.5 all the way up to 25,000. That would be that would be equivalent to, I mean, percentage wise, that would be equivalent to us getting all the way back up to 116. But that doesn't necessarily mean we would make a new all-time high. That could just, and by the way, look at this, guys. Isn't that interesting? If we had that exact same pump back up, actually, I don't have that in the right spot. Let me move that. That would probably put us over. Gotta move that up to the current price. That would put us right up to about 126, which would be a double top. That would also bring us right up to wick back above the upward trending previous support line that we did break through. That could be the catalyst. That could be all we need. It did happen before. Back here, it wasn't, it didn't quite get us back up to previous highs. But these green, look at this. This is another one. These are the green dots that happen once we get down to this white line. They're usually nice pumps to the upside. Here's another one, big pump to the upside. This, as you can see here, 64.5 last bull market top. We come all the way down like 55%, all the way down to 29K, and that green dot happened. This is the weekly time frame on Market Cipher. The green dot happened, and we pumped all the way back up to 68. We barely broke highs, and then we went into a bear market. Now, if we look at the actual time frame of that, the date range from the time that green dot happened to the time we hit that top, that was
105 days.
105 days. Yeah. I had to back up because my vision's blurry here for some reason. So he got 2.5 months 105 days, which is, yeah. That would bring us into that would bring us into February. But this didn't. This brought us to November. This brought us into basically going into December. And then that was it. But that is a big curve right here, bro. That is a big sweeping drop that we had. And it is huge if you think about it. We dropped all the way from 126 down to 80,500, which is 36% drop. And it's curving around right now, and it's green. So that, let me go down to the lower time frames and look. We do have money flowing out right now in the lower time frames, but we do have a little bit of a bounce here, guys. We have a bounce on this upward trending support line. As you can see, I mean, we had a big drop this morning, but just to the upward trending support. Now the problem here is we got above this downward trending resistance line, and it looked like we were almost holding a support there, but then we fell back through. It's having a hard time getting above that, but it needs to get above that. And it needs to get up in the 94 range and hold as support, which is this wedge that we were just talking about. And if it breaks both of those resistance lines, then we got a nice pump ahead of us. Even if it doesn't make a new all-time high, even if it doesn't go to 150, but it very well could. It could be the big move everybody's waiting for. Let's look at on the daily. Jeez. On the daily, we got a red dot kind of forming here. But the money flow is weird. You see how it curved over, and then there's a red dot right there, but it looks like it's not going down. It looks like it's almost trying to curve back up. And let me look at on the monthly money's flowing out. Yeah, that weekly though, that weekly is a strong green dot on a very low curve. Money on the money flow. So that's to me probably the more accurate one. We also have on the weekly a very clear doji candlestick, usually an undecisive candle indicator, but most of the time it is a trend reversal indication, and the trend has been downward. So if we have a trend reversal here and this candle gets back up, we got 2 days and 7 hours left of this candle. If this candle can get back up and break in the next 2 days, going into the weekend, we could see a pump to the upside. If not, we could see just another retest of this support where it breaks down. Whoops. Where it breaks down here and comes down and just hits this one more time before breaking out. This little area right here. That would be a double bottom. Mike, yeah, it's closed caption for the trading impaired.
I thought that was pretty funny.
I agree. Cynthia, on the hour time frame, I thought I saw a bear flag. Let's go look. Yeah, you talking about this whole thing right here? Bear flag and cup. And then it dropped the depth of the cup. Now coming up to fill the God candle. You talking about this as a cup?
She said 1 hour, I think.
Oh, hourly. I'm sorry. Cup dropped. The depth of the cup. Yeah, usually invalidates the cup and handle. Now coming up to fill the God. Yeah, hopefully. I don't really cup and handles and stuff on the lower time frames in a wedge, especially like this one, especially when they hit the wedge, when they hit the resistance. Again, most of the patterns, bull flags, bear flags, cup and handles, they're accurate 70% of the time, unless they're up against support and resistance. So here we have major resistance. It did not do what you wanted to do. Here we have resistance. It's broke to the downside instead of the upside. I like cup and handles on a little bit higher time frame, maybe the daily or the weekly. It doesn't mean they don't do what we want them to do in the lower time frames. It's just that they're not as accurate. Let me look at some other things here. Let's go to, oops, let me go to pi cycle indicator, guys. Ooh, where's the top line? Look at that. Look how far away this red line is from, well, let me go to the weekly. It's not as good on the daily. So the green line is curving down, but the red line is too. And let me just show you what that means. If we go back and look at the pi cycle indicators, whenever there's a cross, the green line and the red line cross each other right here, right where this little signal comes up, boom. That's usually an indication of the top of a bull market. And I shouldn't say usually, I should say every single time so far. Pi cycle indicator, cross, boom. As soon as you see this pop up, as soon as you see this cross, it's the beginning of the bear market. Pi cycle indicator, red line, green line cross right here. You can see the little pi cycle flag that popped up here. That was the top, boom, bear market. Pi cycle cross right here. Right here, you can see it crossing, the red line crossing the green line. it's sometimes it's a little confusing because you look at this flag and you think it's like right here somewhere, but if you really go straight down, it's right there. And what happened right after that? Boom. So if we go and look at the current situation, we had a cross right here. This was the last bull market. Boom, bear market. And here we are now in the current one. These lines are super far apart. They're not even close to crossing. So a lot of people will say, well, there must be a lot of upside left, or else this time is really different. Well, this time could be different. We have yet to see that. But here's what would have to happen. We would have to pump really hard for a new all-time high for these lines to get close together. And I would say that would probably be sometime around February. It would take that long for that to happen. And that would certainly mean this time is different. What it could be is we could pump between now and December 31st. Let's say we pump, let's say we have a magic next couple of weeks. We have a 40% move to the upside. From where it's at right now, it just brings us up to, I don't know, 130, let's just say somewhere around there, 50%. These lines would get closer together. And then January 1st would happen. The next candle would open on the 12-month time frame. And it could go up, it could go down, it could go up a little bit, but these lines could finally cross, and then all of a sudden we go into a bear market. But we would have to have a major move to the upside for these lines to get any closer. You see right here, look at this. Green line going down, red line going down, far apart. Had a huge move to the upside, and these lines got really close together. They got much closer together. But we didn't cross. And they got far apart again. So we could do that again. But I'm just saying, Pi cycle indicator has been accurate, 100% accurate so far. And it's far apart. So there's one indicator that we look at. And we go over here and we get rid of that and we go to just the EMA ribbon. And we go to the weekly. We're on the weekly. We flip the EMA ribbon. Okay. Generally speaking, when you can go into the ribbon and come back out, but when you flip the ribbon, meaning you go under it and you retest as resistance underneath, it's usually the beginning of the bear market. We flip, boom, 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 can't get back through it, fall. We go through it, we bounce out. With this one, didn't even go all the way through it, just hit to the bottom and bounced out. But when we go through it and retest underneath as resistance, can't get back up, we go down. So where we're at right now, we've been above it. We've dipped into it a couple of times, got back out, dipped into it, got back out, dipped into it, and fell below. We are below it right now. And we need to come, we're coming back up to try to retest it on the weekly. Let's go to the daily. On the daily, we are hitting it right now underneath. Look at that. We flipped it back here. We were above it. We flipped it and held as resistance and dropped. And we come all the way here, and now we're coming up and we're retesting. Look at this. We hit the first band of the EMA ribbon. We went through to the second and even wicked up to the third. We hit the first and the second. We wicked up to the fourth and came back out. So are we going to finally break back through it? I mean, it will be amazing if we do, guys, because that is it's bearish right now, obviously. So these indicators are no joke. I mean, we did flip it back here. This was not a bear market. We flipped it on the daily and we stayed under it for a little while and we broke back above after retesting major support. This is just a falling wedge, but this did take from January 20th top all the way to April 13th for that to happen. So what, 2 months, January, 2.5 months about. And so where are we at right now? This was October 6th at the top. And right now is December. I mean, about the same amount of time, guys. So it's, I mean, and you can see here, we did the same thing. We come up to it. We go into it, but we can't quite get through. We fall a little bit lower. It's like this. We come up to it. We could fall a little bit lower. Come back up in it. Can't get through it. Fall even a little lower. Look at this. 1, 2, 3 lower lows right here. And then finally break out. That would look like this. That would look like this, coming back down, boom, and then coming up and trying again, and then boom, and then finally getting out with 3 lower lows. I mean, that would be identical to this situation. I'm not saying that history repeats itself, but yeah, history does tend to repeat sometimes. The only problem with this scenario here, guys, is this all happened above the upward trending support line over and over and over again, and this is now below it. And that's the one negative. So I can show you a lot of positives, a lot of things that looks like we could bounce back up, but I can also show you almost an equal amount of things that are normally things that I would say, okay, we might have hit the top here at 126. I don't want to think that, but it doesn't matter what I want. It's what the charts are telling me. That's where the discipline comes in, guys, sticking to the charts. You know, that's what price action trading is. That's what technical analysis. It's not letting your emotions try to dictate what is going to happen, but what's actually happening on the chart. Doesn't matter what people say. Doesn't matter what the politicians say, what the crypto experts say. Doesn't matter. It's what's actually happening that matters. It's like somebody you know who has really good intentions, but they never do anything that would indicate that they are good. But I had good intentions. I meant to send the birthday card. I really did, but they didn't send it. I meant to bring a present to the party, but they didn't bring it. I meant to stop the little old lady, help the little old lady who was having a problem crossing the street. I sat there in my car, but I thought the light was going to turn red and I didn't want to block traffic and people were honking. I should have got out and helped her. I wanted to, I meant to, but you didn't. So it doesn't matter what your intentions are, to be honest with you, in life in general. It's what you actually do that matters. A lot of people think they're really good people because their intentions are good. But if you never actually act on them, then what's the point? Anyway, I digress. And so it's kind of similar, though. We can want things all day long to happen because of all the sentiment and all the catalyst and all the good things that are happening in crypto. But if they don't actually happen, when all of those things are happening, then what does it matter what people are saying? It's what's actually happening that matters. And so we have to trade accordingly. Cynthia, on the hour time frame, I saw bear. Okay, yeah, answer that. What is cup again mean? Sandy, a cup, let me just show you a really good one. So let me get off of this candles. We had a nice cup and handle here. A cup and handle pattern is called that because it looks like. Let's just show you here. We'll go back over here. So back in, this is the previous bull market top. And then we went into a bear market and we fell all the way down here to 15.5. Boom, right there. And then in the next bull market, which is this current one that we're in right now, we come all the way back up to previous all-time high and created a handle. This is called a cup and handle because it looks like one, right? Here's the other side of the cup. You draw a cup like that. And cup and handle patterns tend to break to the upside equal to the depth of the cup. So you draw a trend line there in the middle of the cup. And when we break out of this handle, we usually go up equal to the depth of the cup. Isn't that something? Look at that. We went right up to that level on the breakout. Also, the handle sometimes resembles a bull flag. So let me get rid of the cup. And even without the handle there, this was a nice bullish flag, and the bull flags tend to break to the upside. Now that again, it was up against major resistance, which was previous all-time high, but it did come down and retest previous resistance first. So as you can see right here, it came all the way down to 48K right there, and that was previous resistance and support. Came down and retested it, broke out. And when it broke out, it popped up first to resistance, which was this resistance here, and then broke out. But if I take the bull flag pole, it did break out right to that level, about right there. So cup and handles tend to break to the upside 70% of the time. And there's something called an inverted cup and handle, which is an upside down cup and handle. And those tend to do the same thing to the opposite direction. So if you have an upside down cup and handle, they tend to break to the downside. Let me see if I can find them. Oh, that doesn't, that looks more like a snail. Kind of like an upside down cup. Get the point? Yeah, and by the way, guys, all of these patterns, let's go into the Crypto Renegades Discord group, go to help desk, go up to pinned messages, scroll down. I mean, these are all resources for you guys. We got coin glass liquidation heat map, we got charts and candle pattern cheat sheet. If you come over here, you'll see we got all these different market structure made simple, double bottoms, bull flags, bull pennants, ascending wedges, descending wedge, triple tops, inverted cup and handle. There's an upside down cup and handle. There is a cup and handle. That's an example there. We got all of these patterns here. You can print this out, guys, or have it somewhere near your desk until you master these. But these are the patterns that generally do. The green arrow indicates what they're likely to do. It doesn't always go that direction, but the majority of the time it does. And that's why these patterns become known for certain things. This bearish double top, otherwise known as an M pattern, tend to break to the downside. Bullish double bottom, otherwise known as a W most of the time, tend to break to the upside. Head and shoulders, because the head and the two shoulders, and then an upside down head and shoulders. Bearish rising wedge, bullish falling wedge. Bullish falling wedge, the village. This is what we're basically in right now. We're falling from the all-time high down in a falling wedge, and those are generally bullish. They generally break to the upside. Here is an ascending triangle, guys. This is exactly what we're in also. Inside of this giant downward falling wedge, we also have this happening. Remember, I said horizontal resistance, upward trending support tend to break to the upside. So we got this happening inside of this, both bullish. We got this happening inside of this. How do you know how you draw these lines here? So what we need is a breakout here to the upside. And if we don't get it, we're going to just fall down to that 80, I would say double bottom here. First potential would be the 80K range, double bottom here, and then bounce out. That would just be a continuation of this downward trending channel. Let me just draw this where I think I had it before. It would be more like that. Falling wedge. We could just wick down. We could hit that 80 and then wick down to the 70. I mean, I don't think we're going to wick that far down, but we could. It is possible. We did it here. We hit the bottom of the downward trending support and then wicked through all the way to 74.5 before climbing out. XRP, very similar situation here, still in downward trending channel, but we did break the upward trending support. Not happy about that. What does that mean? It just means we're not done. We could double bottom. We could come to a double bottom here. I have a stop loss right where the double bottom is. I might need to move that, but I'm betting on see with XRP and me, it's a little different. I'm willing to take a few hits on some of these long positions because I know when it finally does break, it's going to be a parabolic move. And so if it's not ready to break yet, okay, I'm getting nickeled and dimed on my stops. But I know that once it does, I'll make 10 times more back than I'm losing on these little stop losses. If you don't have the stomach for that, just wait for the breakout. But I actually enjoy doing it, so it's not a big deal for me. Because when I do have a big hit, it's usually from doing that. But you know, sometimes you get stopped out, and then you get stopped out again, and then you get stopped out again, and then finally it goes. So you got stopped out 3 times. Most people, when they get stopped out 3 times, they're like, shit, this ain't working. I'm not going to do that again. And then right after they say that, boom, it finally shoots where they wanted it to go. That's why you guys have been here a long time, heard me say that the 3rd time's a charm. Sometimes the 3rd time is a charm. It's not that my direction or my plan or my thesis is wrong. It's just my timing. The one thing you cannot know is exactly when it's going to happen. But I think it's going to happen. So I'm planning on it happening, but it could have happened here where this just went up and did it, or it might hit this first and then come up here and do it, or it might even wick down to here and then do it. But it's going to happen to me. In my mind, it's going to happen. Question is when. I don't want to wake up one morning and XRP's $3.50 and I wasn't in alone. I mean, it'll be good for my hodling accounts. I'll be happy either way, but I still want to maximize the trades. But as you can see, this is the major support down here at the $1.76 range. We've wicked down to it. We wicked down to 181 right here. Back here, we came all the way down to $1.62. Here we hit $1.76. So in this blued out zone that I have here, it can go anywhere in there and even a little bit below. This, I don't think is going to happen again. That was an anomaly on the 10th when everything dumped. And look how quickly we recovered. That's just a wick. The money flow came in quick, boom, brought us right back up here, and we stayed in this channel. On the other hand, right here, we do have somewhat some downward trending. Hopefully, this just is I'm just going to get rid of that for now. It doesn't matter. Hopefully, this is just a double bottom, and it could come anywhere into this range. I have this line here at $1.94 because we had support, and support there several times. The majority of the time, it hit that and bounced. So that's why I have my stop loss under that, because if it goes below that, it doesn't mean it won't wick down and bounce out. If I really wanted to, I could move my stop loss a little further out of the way, but my liquidation is right under this zone. So I'd rather get stopped out than liquidated. But at the same time, it is a little risky. You could just wait for this, guys. This is what you normally wait for, is you wait for this and you wait for this breakout first, and then a retest of previous resistance as support, and it starts to climb. That's when you enter your long. And when you do that, it's safer. And then when it goes up to $3, you have an excellent entry. However, it won't be as good as mine, but it'll be excellent. But my risk is just more. That's all. And indicates an upward trend. The depth of the cup coming off the handle, apparently, unless it is against support or resistance. Oh, I'm sorry, Cynthia. Thank you. You were answering someone else's question. Appreciate that. Green dot on Cipher B weekly. Yes, talked about that. You might have. I don't know if you just. No, you said that 20 minutes ago. Yeah, we went over that. That's right, Keith. Faith without work is dead. Just do it. Yep. I said it before. I mean, Nike has been around for a long time. By the way, the word Nike is derived from the Greek word. It means victory. That's also my name, hypothetically. Nico is a Greek meaning the same thing. I didn't really even know that until I was a teenager and I started researching names and meanings. But in the Greek mythology, the word Nike, Nico, all mean victory. And the logo, or the slogan rather, that Nike used is just do it. We don't think much about that, but when you realize that all of your success in your life is going to come from just doing it, all of your failure is going to come from you just not doing it. It's really that simple, guys. And when you see that slogan, you might have seen it a million times and never even thought about it. But when you think about it, everything that you hesitate on, everything that you contemplate that you should do, if you did, just do it. And if you look back at your life at all the times that you didn't do it, and if you say to yourself, what if I would have just did it? You can answer that question yourself, how much different your life would be. But I'm telling you, it's kind of miraculous, because a lot of people expect miracles, wait on miracles, pray for miracles, but you can sit on the couch and pray all day long and even use the law of attraction and you wishful thinking and envision yourself in the most beautiful place doing the best things and having this great life. But if you continue to sit on the couch while you're thinking that, nothing will happen. You have to get up and take action towards your goal in order for the thoughts to conspire in your favor to put together the cast of characters that will help you actually accomplish that task. It is a movie. You have a choice. You can either be a actor in someone else's play, or you can be the director, the producer, and the main character in your own. But you have to produce it. You have to direct it. But if you're just a character and you're just getting bounced around by everyone else's rules and decisions, then you're just a stand-in in someone else's movie. You're just an extra. And you're going to always be complaining, always be wondering why you're not getting the lead role. And it's not because someone else ain't giving it to you. It's because you're not taking it. Anyway, I'm sorry. I get off track a little bit sometimes.
Amen, brother.
Thanks.
Can you look at the Ethereum chart as well?
Yes. Let's go.
Thank you very much.
Yes, sir. Let's go to ETH. ETH is doing some weird things against, ETH is in a very similar downward trend, but it did break an upward trending support here, right here, and it did come back up to retest it also right here. It's trying. Very similarly, it is in a upward trending channel as well. And but it already did hit major support here. I mean, if we take this red line and go back, this was major resistance, support, support, resistance, resistance, support and resistance, 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 support, support. And, it did break through that a couple times. It broke here and came all the way down to 221.38, climbed back up, broke below it here, wicked all the way down to that same range, that same level, came up and hit resistance there, and then dropped further all the way down to 1396. Came back up, hit it again as resistance, came back down to retest that level, and then finally broke through again to a new all-time high, almost 5K, and since then has fallen all the way back down to here. So is this the all-time high of this bull market, or do we have more pump to go? It's hard to say, guys, but if you look at this white line here, we got an overall upward trend from this bottom down here of 877 back in the previous bear market bottom. We are still above. We did dip below here once, but then that was in April, I think. Yeah, April of this year. And we're still above this upward trend line, so that's positive. To me, it's still bull market, bullish market, but let me get rid of some of these other things here. So it's kind of hard to say. I think Ethereum needs to break out of this downward trending channel, just like Bitcoin and XRP and everything else. So still a lot of correlation, in my view. Still correlating. Nothing has broken away yet. No altcoin season yet. I mean, unless this was it, but not really, in my mind. We do have a couple weeks left of this year, guys, and usually the big move does happen in December before the end of the year in each bull market cycle. There usually is a 30-40% pump to the upside. Just hasn't happened yet. If we get to December 31st and it doesn't happen and we're still down low like this, guys, then it is possible that this price was the top of Ethereum and the 126 was the top of Bitcoin. That is possible. But there's a lot of people out there that think that 2026 is going to be the big parabolic move for crypto. It just wouldn't coincide with bull and bear market cycles. So what does that mean? That means if we look at history, that won't happen. But if we look at this being the end of bull and bear market cycles and this time being different, that could happen. I just can't make plans on it because it hasn't happened before. I like to look at what's already happened. I like to look at the history and say what's likely to happen based on what's always happened, not what's likely to happen based on what could happen. I mean, every time you play the lotto and buy that Powerball ticket, you've lost so far. Otherwise, you wouldn't be here. What could happen is you could win. What's likely to happen is a continuation of what has happened. Doesn't mean you can't win. Doesn't mean it won't happen. But you have to look at the history of things first. And then obviously the odds and the percentage of that chance of that happening based on historical data. There was a time back when in the Florida lottery, when Lotto just started in Florida, when they first announced that the lottery is now a thing in Florida. Shit, that was probably 35 years ago or so. In my neighborhood, someone won the lotto. There was no Powerball or anything back then. It was just lotto, Florida lottery. Someone won the lotto. It was like $13 million. And they were in my neighborhood, like literally like 10 houses down. And everybody was excited for them. And everybody, yeah, that's cool. That's cool. So everybody wants to play the lotto. And then like 6 months later, another person in my same neighborhood. Now we're talking about a cul-de-sac, like a neighborhood where you pull in and there's only one way in and one way out. There's probably about 60 houses in the neighborhood. And another person won lotto in my neighborhood. And it was like 3 million that time. So we thought, damn, this neighborhood, the property values are going to go up. People are going to think this is a lucky neighborhood. Then then there was people doing statistics and what the odds were of that happening. And it was so freaking ridiculously low, the chances of it happening again. And of course it didn't. But yeah, I mean, statistically, it's possible and I've said this before, it's possible for you to put your clothes from the washing machine into the dryer. And then when the timer goes off and you go to pull the clothes out, they're all folded already. Statistically, I think it's like 1 in a trillion chance, but it could happen. It's possible, but it's probably not going to happen in your lifetime or 10 more lifetimes. Now, as far as this is concerned, though, there's a reason why this time could be different. We have major mainstream adoption happening. We got banks, and I just posted this in my Signal channel just yesterday. We got major banks issuing credit against Bitcoin. This bank right here, Bank of America, Wells Fargo, they would close your account if you sent money from your bank account to Coinbase or crypto.com just a few years ago. They would literally close your account. They'll warn you. They won't let it go through, and then they'll tell you can't do that. Right now, no problem. JP Morgan, Chase, no problem. They're in partnership with Coinbase now. They realized that billions of dollars left bank accounts to go into crypto, and they weren't part of it. And banks like Coinbase, because Coinbase is a bank, it's just a bank for crypto. They realized that these companies were making huge money. And if these banks here would have just had crypto available to their customers, no one would have ever left. No one would have ever sent the money away. How many billions went into Coinbase? Hundreds of billions. These banks would have that money sitting in their accounts right now if they would have just allowed people to hold Bitcoin. And guess who beat them to it? Not only did all the crypto companies do it, but PayPal. Elon Musk knew. PayPal allowed it for a long time ago. I don't think Elon Musk was the owner at that point, but he was probably in on all that stuff. Cash App, PayPal. There's a lot of places where you can literally hold. And PayPal, when they did it, you could not send and receive. You could only buy and hold. You could buy, hold, and sell, but you couldn't send and receive. But now you can. But that's the way it should be with all the banks. Now, if you could have your checking account, your savings account, your Bitcoin wallet, and all these things on those banks, no one would leave. And they're getting there, guys. They're going to do it, and they're definitely going to be custodians. They're going to say, oh, you want a loan to buy a new house? Yeah, you can just deposit your Bitcoin over here, and we will loan you against that. It's coming. I mean, we're mainstream. And so all of this is happening during this bull market cycle. And so that is different. We got a president of the United States who is very crypto friendly. His whole family has their own tokens. His sons have one of like the 4th or 5th largest crypto platform now. They're very bullish on crypto. They have their own mining operations. So this administration and all the new laws that are changing, the Genius Act, all these things that are in effect now. And these are all good things for crypto. Now, I mean, it does change things a bit. Instead of being totally decentralized, they're trying to still govern it, trying to be at least regulated. But that's kind of what has to happen in order for mass adoption to happen. And we need a mass adoption in order for the price to go up. So it's kind of like the lesser of two evils. It's better. Now, Bitcoin is meant to be decentralized. Bitcoin will always be decentralized. No one can control it. But the government's now getting involved. They promised to buy 1 million Bitcoins over the next 5 years. That at the current price, that's $100 billion worth. And so with all of these things, and Michael Saylor, of course, very confident that the bull bear market cycle thing is over and this will be the last one, and we're just going to go into a steady climb up. Well, I've yet to see that, but it could happen, and this could be the time. It would make sense. And if we do go into a bear market now, maybe it won't be as low as previous bear market drops. Like back here, we dropped from the bull market top of 68K down to 15.5, 78K. I mean, 78%. If we go and look at previous bull market tops and drops, all in the 70, look at that, 83%. 87%. 93%. And the last one here, 77%. So if we had a drop like that, guys, now from the top, if 126 was the top, if we even dropped 77%, that would just bring us back to 70K, which is right here. We're right on the doorstep. Is that right? Hold on one second. Yeah. No. I had that backwards, sorry. That didn't seem right to me. That would be a 42% drop from the top. 77% drop. That would bring us down into the 30K range. Yep. Right there. Let's just say that happened. Very similar to all these. And why would that make sense if that happened? Because this was previous major support, resistance, and we never retested that level yet. And that would actually be proper market structure. Healthy market structure. I'm not saying we're going that low, guys and gals, because this time could be different. I'm just saying that if we were to have a bear market similar to the rest, then that's about that's about somewhere in the 75% range. And that is what's happened every time in the past. 1, bull market, bear market. 2, bull market, bear market. 3, 4. I mean, if this time is different, then we won't have it. And we will break out and make a new high. Or it just will be later on. Maybe we'll come up to 160, 170, which is what the Fibonacci tells us it's going to be. And then if we did get up to there, let's just say 175, then a 76% drop to the downside would just bring us down to like 40K if that happened. And that's only if we continue with bull and bear market cycles. It is totally possible for that to end. And it is kind of in the cards for it to end once there is stability in the crypto market. And we're not going to have these huge swings. But is now the time? Is this when that happens? I don't have a crystal ball, unfortunately, so I have to go by what the charts are showing me. Chris, what's the best time frame for cup and handle? I would say the daily or weekly and up. Bigger time frames, higher time frames are always more accurate. Jeff, good idea. Save the patterns to your background until you have them memorized. Good job. Good idea. Patrick, Chad uses a lot of channels in his charts. How do you find a support or resistance channel? Yeah, get on the basics call, but it's kind of simple when you know what to look for. So let me just go back to here. Let me just get rid of all these lines. I mean, look at the lines right now, guys. Let me just get rid of them. Do you see where the resistance is? We have a top, and a top. We have a bottom, we have a top, a higher top, and a higher top. We have a low, a higher low, and a higher low right now so far. So that would be a support line. If I drew it from here and touched that line and then kept going and touched that line and then kept going and touched this is what it would look like. This white line right here. Boom, 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 boom. And then here, once it gets up to here, we broke it We went through it right here. It was support, but then it fell through and became resistance. Now I have this wedge in here, which this orange line right here indicates, I'm going to change the color of that just so you can see it better, indicates, that indicates it was support here, resistance, resistance, resistance. That is horizontal resistance. This orange line here is upward trending support, 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 support. So we're trending up, coming up against the ceiling. The floor is getting higher and higher and higher. The ceiling is staying horizontal. And it's also coming up against this white line, which is the long running upward trending previous previous support, now acting as resistance. And we have this downward trending resistance from the actual falling wedge. So we have resistance, 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 resistance. Resistance is like a ceiling. Support is like the floor. So when we break, if we break to the upside, we have to break this downward trending resistance, this horizontal resistance, and this upward trending resistance, all culminating. Look at this. I mean, they're right all crossing each other right here. That's major resistance. So if we break through this, guys, right now, get above that white line, get above that orange line, and get above that orange line, and hold as support, then that is a trend reversal breakout to the upside. Very positive, very powerful, and that should be a big pump to the upside. However, if it cannot get through that, guys, and it hits this resistance, the horizontal resistance, the downward trending resistance, and the white upward trending resistance, and it just can't get through it, and then we break to the downside of this upward trending support, and holds this resistance again right there, we could fall to a double bottom, double here, and then break out. And even then, we would still have to, that means we broke out of this resistance, we'd still have to come up and break out of this and break above that, which if we break out of this and bounce on this, we are likely now to hit that and then finally break through. Hopefully that helps a little bit, Patrick. Cynthia, I'm running out of ink taking notes. Pilar, I saw your request to get in the Facebook group. I thought you'd been in there. Did you accidentally get knocked out or something? Was that you? The free Facebook group? Thank you, Sandy. I appreciate that. Okay, I'll let you back in there. Just wanted to make sure it was you because the picture looked different. Oh, you have two Facebook. Okay, you're trying to get in with your other Facebook channel. That's why. I knew the name was right, but the profile looked different. Cynthia, big giant head and shoulder on support line BTC daily. Let's look at that. I am on the daily. Let's just zoom in here. Head and shoulders. Talking about here. Oh, you're talking about big, 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 big. You're talking about here. This one, this one. Yeah, it is possible. And we talked about that a few calls ago, but this shoulder on this side would need to get a lot higher, I think. So that what she's talking about is this. Shoulder, left shoulder, head. We would need a right shoulder, and which would be that would mean that we broke out to the upside here, but we just made a lower high here, which would still be a great pump. We could come all the way up to 100,000 or 110. But if we get above 100, I think we have a good shot at another run up. Shift to the left already there. What are you talking about? you talking about, Willis? Where's the head? 126 is the highest it's ever been. That would be the head. Bottom flag is left shoulder, right? Bottom flag, this one? This one? This one? Thinking this one is the left shoulder? No, because this is not the head. Because we already had a higher high. The head always has to be the highest point. You're just looking at it as like an angle. You're looking at it like this, I think. And then making it look like this is the highest head, but it's the price up here. But it could turn into one if we create a right side shoulder here. So it would look like I think this could be a shoulder, left shoulder, head. We would need a right shoulder. And that could happen. This could come up, and you know, here's how I can see that playing out. Actually, we actually can't get through right here. We come down and retest, and then we come back up and we hit this line again, and we hit it, and can't get through, and then come back down. That would be a perfect head and shoulder in that case. The floor of that head and shoulder would be like this. Let me get rid of that and start over. It would actually be more like this down here. Shoulder, head, shoulder, and it would be all the way down here would be the mountain, or the head and shoulders. So if that were to happen, it would look like this.
Isn't the head kind of like a upside down cup and handle?
Hold on one second. And then if that were the head and shoulder, if that did turn into a head and shoulder, then we take the head and we draw a line down to the bottom where it's equal on both sides. And that, if we broke to the bottom of that, that's where it could take us, which is down where I just told you, right around that 30K range. Say that again, sir.
Isn't that head kind of like a upside down cup and handle?
Right here. About right here.
Yeah, I mean, based on that other.
Oh, this whole thing right here.
Uh-huh.
Let me just get rid of my squiggly lines here. Yeah, it kind of is. We had one here, broke to the upside. We have one. I mean, if we continue in an upward trend and bull market, then it's in an upward trending channel. It's hitting the floor, then hitting the ceiling, hitting the floor, then hitting the ceiling, hitting the floor. But this time it broke through the floor. If I put the lines back, you'll see this white line was the floor. Here we had an inverted cup and handle, and it hit the floor up against resistance, broke to the upside instead of the downside. Here we do have another one, but we broke through the floor. If that is a handle and we do break to the downside, once again, that could certainly be an inverted cup and handle. And that would bring us right down. That would be a big drop as well if that happened. It could be. So we'll keep an eye on that. We'll keep an eye on that since it did break the floor. I think we might actually we might actually bounce somewhere in this range, somewhere between the 73 and that 80, and come back up and retest this white line if we don't break out here. If we break out here, we're going to get, if we get through two major resistance levels, this upward trending previous support as resistance, this downward trending resistance line, and this horizontal resistance line. If we actually break through here back into this channel, then we will see a big pump to the upside. We will flip the EMA ribbon back positive. But if we can't get through this, and by the way, guys, that is major resistance right there. We got downward trending resistance, upward trending resistance, horizontal resistance, all happening at the same time, all verging where the price is right now. That is a pressure cooker. That is winding into an apex where the spring, the breakout could be massive. In fact, mark my words right now, when we break out of this little apex right here, guys, whether it's up or down, it's going to be a big candle. Especially if it breaks to the upside.
What's market cipher chart looking like for that, please?
Did you just get on the call recently?
Yes, sir.
Yeah, we went over this. We were looking at market cycle earlier, but I'll show you. We'll just go back over there.
Oh, sorry about that. Thank you.
That's okay.
Nico, I'm having an issue on TradingView where like Bitcoin and stuff, I can't go back more than like 2 years. It won't fill in at all. It won't fill in past like 2022.
Okay. Which when you're on Bitcoin here, which one are you on? Are you on crypto and are you on all-time history index?
No, I'm not on that one. I'm just on the regular one that's kind of the similar to the one that's I use on Phemex. It's the Bitcoin with the P. What's it called?
Perpetual, yeah.
Yeah, I'm in that. I'm on that one, and it won't go back more than like
That's
2
because
years.
the market didn't exist. It didn't. There wasn't a Bitcoin being traded on a Phemex. So you have to look at, like Nico said, the all-time history.
All-time history index. That's the one I'm on
Oh,
right now.
so do you do that for? Do they have that for other coins too? Because cause I know they just put XRP on TradeView, but it only goes back like a month. That didn't go back very far.
Let me show you. Let me show you. XRP. Let me just go
Spot
to
crypto. The one that says spot crypto is usually the one that's got a trading view logo. Usually that's all the history. I think it's down 2 or 3 more.
right
And
here.
he was probably looking at the coin margin for XRP, which only started this year.
Right.
No, I don't do coin margin. I mean I don't bet coin per coin stuff.
Yeah, the markets just didn't exist. Phemex wasn't trading Bitcoin
Yeah.
over 2 years ago, so the data doesn't exist is all.
Yeah. So this is XRP right now, going all the way back to 2013.
Okay.
So you just got to click on the right one. For XRP, the one I'm on right now is crypto spot crypto. It just says XRP. It doesn't say against anything else. Just XRP. Spot crypto. Trading View. Not a platform. This is Coinbase. This is Bitstamp. This one right here is Binance. This is Kraken. They're only going to show you the history from when they started. TradingView goes back pretty much to the beginning. And on Bitcoin, you need to look at all-time index. BTC, right here, all-time history index. And then that will take you all the way back to where you see a dinosaur. See the little dinosaur right here? 2009. Pretty interesting. Hopefully that helped. Thank you, Bill. Any other questions, guys?
So is Market Cipher showing a red dot or a green
yeah.
dot, right?
So on Market Cipher, we did, it depends on what time frame you're on, obviously. On the weekly, we got a green dot, very low, which is bullish. And this is a positive indication that we might break out right here. This would be very good. And also, if we look on the weekly, guys, we see this Doge candlestick right here. After a big drop down, that's usually an indication of a trend reversal, especially after hitting support. So if we have a trend reversal, here's the trend. A reversal would be a breakout. We got a green dot right here on this current candlestick. After a huge money flow is going back in. And a green dot here on this too. Okay, guys, so this is a double green dot right here. I am long. Let's just go back. Let's just go back, because if this does break out, then that's going to be an excellent entry right there. If it doesn't, I'm going to get stopped, and then I'll just wait for the bounce and I'll re-enter down here. But that is a very strong indication. Let me just go back. This right here, guys, let's just look at every time we had a green dot down here, especially when we get down to this, close to this dotted line right here and this double line. Green dot, big pump to the upside. That was the last time we had a falling wedge. Green dot. Look where the green dot happened. Boom, breakout. Let's go back here. Green dot down here. That wasn't nearly as far. Still breakout. Let's go down here when we were really below this dotted line. We had a double green dot. And look at the dotted line going straight up right here where we had the double green dot. Big pump to the upside. Now we were in a bear market and we did drop. We didn't know we were yet. This is very similar to the current situation. We had a double top, and then we dropped, and we had a green dot down here. We pumped to the upside. This would be a giant head and shoulders like we just discussed. That would be a very similar situation. That would be the beginning of the bear market if it broke to the downside. But then we had this big dump down, and then we had a green dot with a double green dot, and we had a huge pump up, but it was still a lower high and a continuation of the bear market. But that was still a big pump from here to here. And we could have that. That would be a 40%. That was 43% move to the upside. Doesn't look like it on this chart, but that would be equal to us breaking out here and going all the way up to like 129. But very rarely, guys, I mean, you look down here, do we have double green dots? And usually when that happens, it's the beginning of a big move to the upside. This one in the last bull market was a 40% move to the upside, but it didn't bring us to a higher high.
So Nico, this is a weekly chart on Bitcoin, and is that the most accurate in terms of looking at the, I guess, this green dots or red dots?
More accurate than the lower time frames. Yeah. And it is the weekly I'm on right now. Yes. Now, if I go down to the daily, we do have green dots, but we had the double green dot right here when we hit the bottom. If you were just trading Market Cipher and you weren't listening to me at all, and you were just looking at market cipher, that would have been a great entry right there on the double green dots. And we're having double green dots right now on the weekly. Look at this double green dot here. We come down, we had a double green dot. Look at this. Not only do we have double green dot there, but we're having another green dot and another green dot right now. So, and market cipher, guys, nothing is foolproof, but market cipher is a combination of all the indicators. It's a bundle of everything. It's showing you the money flow. If you don't, I don't even have all the details to explain it to you. You'd have to go to their website and read about it if you're interested. It is available to you also in our Discord. You can go into the official links channel, scroll up, and here it is right here, Market Cipher Beat, Market Cipher. There's the link. Whatever discounts they have going at the moment, you will get it even if you use the referral link. And it's not net, you're not obligated, you don't need it. It's not cheap. Here's the pricing. It's $1,500 for lifetime. But if you're going to take trading seriously and you want to have one of the best indicator bundles on your computer, I have it, if that's any indication of anything. But if you go over here, it'll explain how it works, and there's all kinds of videos, tutorial videos and stuff that will show you how it works and what all of those lines, what all of these things mean. In fact, if I go back, this is just Market Cipher B. There's also Market Cipher A. Let me get rid of the EMA ribbons, and then let me put Market Cipher A on. That's Market Cipher A. Kind of has the EMA ribbons mixed in with all of these little gold and red diamonds. When you see a red diamond, a big red diamond, it dumps. Look at that. Red dot, red diamond fell. That's maybe a shorter term scalp trade. But this purple triangle means something. This yellow X means something. The yellow X, I believe, means whale dumping or something like that. Anybody else already know more about?
Yeah, it's market manipulation. Well done.
Market manipulation. Look at that big dump from there.
The blue triangle is supposed to say trend reversal. But it's not always correct. You see, it's like it was down. It looks like, oh, it's trend reversal, but then it just went right back down. So it's not always correct.
Yeah, well, the trend actually was up short term, but it did. So it might have reversed. That might have been pretty accurate. But all these little gold diamonds mean something. Green dots up here mean something. Red, they all mean something. So you got to learn it. Here's a big red diamond right there. They all mean something. So when you do buy the package, you're going to get into their back office. You're going to get into the training center, where it really goes in detail of explaining. There's videos that show you how it all works. And it's pretty cool. Now, the founder, the guy who created this, his name is Crypto Face. He's a character. He's really literally a character, guys. Now, let me just go up to YouTube and show you what I mean. Crypto Face on YouTube. He's got his own channel. This is what he covers. It covers his face, not because of COVID. He was doing this way before COVID. He covers his face because he doesn't want to be spotted or recognized in public or something. I really don't know what his situation is there, but he trades live. In fact, let me click on live. $3 million trade, $3 million trade, 2 million, 7 million, 10 million. When I say 10 million, let me just click and show you. This was a live he did. And if you look, he's in a trade here. Let me just see if I can find the contracts. He uses different platforms sometimes. But he was in this trade with 9,997,000 USDT. 10 million bucks. Unrealized profit, 107,000. Realized P&L, 43,000. So he takes big trades. Now, he doesn't teach like we do. He doesn't have like a signals channel, and he does have a Discord group for members, people who bought the market cipher. but he just trades live and demonstrates using Market Cipher while he's trading, and then people just go and buy Market Cipher. He's selling Market Cipher. He created, now he is a great trader, and I've seen him make millions in a day, but he's also drunk and obnoxious. Like, I wouldn't say drunk, but he has traded drunk. Now he goes live, and I say this jokingly, but he goes live and he's singing, he's rapping, he's cussing, he's swearing, he's saying the most off the wall, bizarre shit while he's making hundreds of thousands of dollars right in front of your eyes. He's very entertaining, but some of you might say he's rude and obnoxious if you watch him. But he is like one of those young geniuses who created Market Cipher and created one of the best, trading indicator bundles out there. And he just trades for fun and makes millions. He drives around in Ferraris. He's got crazy videos. Rappers have made songs about him. Interesting guy. Does what we do. He trades crypto futures contracts just like we do with leverage. So, but if you want to subscribe to his channel, you can see him in action every once in a while. Let me go back. But he's the one that created Market Cipher. So that's the only reason why I bring that up. Young guy, probably late 20s, maybe early 30s. Scared money don't make no money. There's actually a rap song that a rapper created called Scared Money Don't Make No Money, and they mentioned him in it. Crazy world we live in. So use it, don't use it. You don't have to. Their Thanksgiving, they had a 65% off sale during Thanksgiving. The discount code was gobble gobble. It didn't matter if you used my referral link or any link, it doesn't matter. You'd still get that discount, but that one ended. I don't think that is still available. They will have a Christmas one. So if you're thinking about getting it, just wait and you will see promo codes and stuff like that, especially on his channel. On his channel, he'll say when he's having a sale, but use my referral link, you'll get the same discount. So that's about it, guys. I'm going to wrap it up here. We got 20 minutes before the onboarding call with Bill. But it's going to be interesting to see if we break out of this. I'm watching closely. Don't worry. If I see a breakout, these are my current open positions. I'll show you right now. I am a little bit negative. Whoops. I am a little bit negative because I'm holding long positions from a little bit higher than where we currently are at the moment because I'm expecting that breakout. I am in 1, 2, 3, 4 long positions, 2 on XRP, 1 on a USDT margin, 1 on a XRP margin, a Bitcoin on a Bitcoin margin, and Ethereum long. I was in the green on some of these over the last couple of days, but it dipped down again a little bit today with this big red candle, but it is bouncing on the upward trending support. If it does not break out and I get closed out or get stopped out, I will probably it depends. If we come back under this line, then I will wait for the double bottom. I will long here and I will put signals in the group. I will also let you know if I get taken out of these long positions I'm in right now, but that's the risk I'm willing to take, guys. You should wait for the breakout if you're brand new and you don't know what you're doing, but I'm a little bit more of a risk taker. Yes, Lynn, I will do that right now. Let me just, when I post my open positions here, guys, so that you can see them, I'm just going to copy them right now. Here's my current open positions. Then I'm going to paste that in my signal channel so you can see this is what I'm in. And when I paste this here, guys, it shows. Let me just type this in here.
Nico, I have a question too.
Yes. Go ahead.
How do you figure out where your weekend trap roughly is? Or is that more a chat thing?
Figure out what?
Your
The
weekend trap.
The weekend trap is from 5 p.m. on Friday to 5. That's Eastern time. 5 p.m. New York, Friday to 5 p.m. New York on Sunday.
Yeah, I have that, but how do you guys figure that out usually? Like where the top and the bottom kind of is? Like, I guess you don't know 100%,
Yeah,
but you kind of have an idea, I guess, where it would
yeah, I'll show you.
consolidate in between.
I'll show you. So I just shared my position. So guys, when you're looking at this, it shows right here my entry price when I got in. It shows my leverage, shows how many contracts, shows my liquidation. It shows my margin, what I'm risking on the trade, and my current unrealized P&L or gains or losses, whatever. I'm negative right now, about 1,900 on all these. But that's my current situation. So when you're looking at this and you want to figure out how can you, well, what do you gain from this? It's, you know, you could have a better entry than me, obviously, since I'm a little negative right now. But this is just where I'm holding right now because I'm planning on a bigger move to the upside. I'm willing to hold during these little negative times on in some situations when I'm confident that it's going to break to the upside. But that doesn't mean I'm going to be right. And if I'm wrong, I will re-enter here on the weekend trap. For the gentleman who was just asking, would be somewhere down in this zone, in my opinion. If it breaks this upward trending support going into the weekend here, we could see a dump down, and this bounce will be the double bottom, boom, and then we break out to the upside. That would be probably right here in the 80K. It's up 80,500, 81,000 zone. Somewhere in here. And then if you look, if I go over here and show you what Chad sometimes refers to as the boardroom and bring that over. Right. See this consolidation here before it broke out? Wick down below and then break out? That's right here in this zone.
So that's how you kind of figure out where your weekend trap is going to be roughly.
I don't call it that and I don't look at it that. I just look at it as the next support level and where the double bottom would be. But yeah, that's what it is, in my opinion. Bill, you got any explanation for that? Any other?
The only reason we ever talk about the weekend trap is it's just a dead zone that happens from Friday to Sunday. And at the end of it, Sunday, Monday, the market makers will push us one way or the other out of that trap, out of that box towards last week's low or last week's high, usually in a false move. That's what Chad talks about.
Yeah.
Okay, thank you.
If it goes into that zone right there where your cursor is, will it take your stop loss?
Yes, I will be stopped out. But I will get back in down here. And I will re-enter and I will repost that entry. I will let you know that I was taken out and I am re-entering and give you my new coordinates. My liquidation is up here. So on this particular trade, I don't have room for it to break this upward trending support line. So I would get stopped out on this one quick.
Couldn't you add more contracts to lower your liquidation price or your stop loss?
Yes. You could add more contracts. You can lower your leverage. First, try to lower your leverage. First, don't be such high leverage. I shouldn't be at 32x. But I cannot lower it anymore because it's already negative. Once you go negative, you can only lower it so much unless you add more contracts. If I add a lot more contracts, I could lower it. But that's doubling down. And so I'm not ready to add a lot of contracts until it does what I want it to do. Right now, I'm in the open position, hoping that it breaks out. As soon as I see it breaking out, I will add more contracts and maybe even increase my leverage. A little premature for me to do that. I want to double down only when the bet is going in my favor. Does that make sense? I entered this trade prematurely before the breakout of the resistance, before the breakout of this resistance, and before the break above this upward trending resistance, because it would just be a much better entry if I caught the pop, if it broke out to the upside. if I catch the pop to the downside, this is not a good entry. That's a risky trade for me. And I mentioned it on the last couple of calls that it's risky. So if you're going to take a position before a breakout and a retest, meaning a confirmation, the safest way to do it would be, okay, this is a apex, a breakout is imminent. And I've been saying that breakout is imminent. If we go back into go to my signal channel, scroll up, I use those words. Breakout is imminent. When a breakout is imminent, you can wait for the breakout. Boom, breakout. Retest, support. That's confirmation. Starts to climb, you enter. This is where you enter. That's the safest way to do it. That's where the hedge funds will treat you. That's what the institutional trading teaching will teach you to do. Wait for the breakout and confirmation. Entering before the breakout is risky. No risk, no reward sometimes, obviously, but also you run the risk of it not breaking out and breaking to the downside instead, which takes you out of the trade. But when that happens to me, what it shows me is that my timing was off. I think this is going to happen, but it may not happen yet. It could happen down here, boom. Or it could happen after hitting this, boom. So I might just be early to the party. And so I will wait. If it takes me out, I'll just wait for the next trade setup or the next bounce down here on further down support. And I'll do it again. And I'll keep doing it until it either does what I want it to do, what I think it's going to do, or it breaks the bottom support level. So if that happens, guys, if I think it's going to break to the upside here and it just goes down and hits this, and I go long again here because it's double bottoming and I'm long here, now I'm profitable, but it hits resistance again and it doesn't get through. And then it comes back down and I'm breaking even again. Now it breaks below this and I'm negative and it retests as resistance. I'm getting out of this long and I'm reversing the position short because this means to me, we're going down further. I'm going to bet because it hasn't happened yet that we're going to bounce here and go long. But if I'm proven wrong by this support being broken and turned into resistance, I will simply reverse my position, and whatever I lost here on this stop loss being hit and whatever I lose here on this going negative here, I will make back here times 5. I don't worry about it. I don't want you guys to worry about it or stress out when you don't know what you're doing yet. So I always say, don't take these risky positions unless you know what you're doing and you understand it and you have the resources to stomach a couple stop loss hits before the big move happens. But at the same time, guys, I don't want you to it's not the safest thing to do. The safest thing to do is wait for breakout and wait for confirmation. And I like to make that clear on these calls because I'm not telling you to do what I'm doing. In fact, I only give signals when the breakout is happening. These are not signals over here. These are just me telling you what's happening. And when I put my open positions, that's just me telling you what I'm doing. But an actual signal looks like this, where I'm giving you the actual entry right here. I'm giving you the breakdown, the entry, the stop loss, and the take profit target. That's an actual signal. Okay.
Nico, where we're at right now, wouldn't you say like doesn't this look like a textbook bear flag, or am I wrong on that? I mean, it is okay. Yeah. I'm still learning like what these look like, but to me that looks like a bear flag.
It's a bear flag, but it is also up against support, and it's also wedged against support and resistance. So we have a bearish flag creating a bullish. Let me just show you one more time. Creating a right here, a ascending triangle where the bottom is going up, but the top is staying flat, which is bullish. So we have now because the first line came down here, it looks like a bear flag. So we have a bearish flag, also a ascending triangle. Ascending means going up on the floor, but the ceiling staying the same. More touch points up here is likely to break to the upside. However, we're up against downward trending resistance, which is bearish. However, we're up against upward trending resistance, which is bearish. So we got both. And then we're up against support here, this whole zone. So it's kind of like wedging in between. That's why I say the breakout is imminent. And that's why I say this is winding into this, like this is going to be a powerful move one way or the other. It's either going to break out with velocity to the upside. Boom. Maybe we have a huge candle up and then it comes down and retests and then holds. Or boom, we break to the downside with velocity.
And based on the signals that Chad was giving, there's an expectation that it would potentially break to the downside further. And I've been kind of tracking the heat map on Bitcoin and XRP, right? And it looks like there's quite a bit of liquidity below even where we're at on Bitcoin. So, I mean, I would assume there would be some sort of wick down to grab that liquidity. There's a high potential of that, right? Based on what I've seen.
This is Chad's post yesterday, long.
Yep.
Entry set limit. And because he's expecting it to possibly come down first.
Yep.
But this little downward trek right here, I think already happened. Let me look.
Yep.
I'm on the daily. Let's see what's he on here. This is the 15-minute. Yeah. Yeah. So that was right here when he gave that signal.
Hmm.
And it's done this already down to here, which is down to this level right here. It hasn't quite come all the way there yet. So if it does come to there, that is the 88.9 zone, which is right about down here. That would mean breaking this upward trending support down to about here, somewhere even to this. And by the way, that is obviously, guys, we do have support and resistance and support and support. And it could bounce off that and then break back up. But me personally, I'm thinking that if we do break this upward trending support, we might even come down to a little bit lower than that. Probably this zone here, somewhere in the 86. It might not be there. It could be up a little higher. Could be, I might have this in the wrong spot. But yeah, no, I think that makes perfect sense to me. That's a good entry. Wait for that. Guys. Don't get in now because I'm in. We are bouncing on this upward trending support right now. We're still in this apex, but for me, it needs to get back above 90, my entry. Close. I'm only negative by a tiny little amount.
So I've been kind of learning and watching the charts and how they work, and what I've noticed, like Bitcoin and XRP particularly, they'll really reach down and swoop up, do those liquidity sweeps and wick down, and even if it's kind of out of a trend line, and then it'll break back up into the trend line, bounce back into the trend line. I've seen that happen quite a bit too. So is that a high probability that it'd break through the trend line and then break back into the trend line? I've been seeing some of that as well.
Like here?
Yeah, exactly.
Yeah, so whenever a support line or resistance line is broken, you want to see if it holds. That's why we call it confirmation. That's why I say here, if we were to break out of this, it needs to hold above it as support. Otherwise, it could break through and just come right back into the channel. And that has happened. All right. If I look here, we wicked through both of those lines and came right back down. If we go all the way back, you can see sometimes we get through and we get through and then we come back down. Doesn't quite hold above it. It needs to break and hold as resistant support, what used to be resistance. And a lot of times we're a little premature to that. I'm definitely premature on this trade because I'm trying to get the best entry possible off the upward trending support rather than the breakout. But if it breaks out, that's just more confirmation that it's going to do what we want. And then I just increase my contracts and my leverage probably a little bit.
Got it. Okay. That's helpful. Thanks, Nico.
You're welcome. All right, all right.
It gets confusing though. It's like learning it in these apexes, or I'm learning charts, and it seems to be more complex when it hasn't chosen a direction yet.
Yeah, and not to mention, guys, it's like Russian dolls. You know, we see we're in a upward trending wedge inside of a downward trending channel, right? Inside of an overall upward trending channel.
Yeah, I think that's why it gets really confusing for me. Like anytime I've ever been in the crypto market, this is my second bull run, and I just am like, when I got into it, it was upward trending, so I kind of always knew where it was heading.
Yeah.
And right now, it's very confusing.
It can be, but then that's why you got to zoom out to the higher time frame. So we're upward trending in this channel, but inside this upward trending channel, we have times when we're a downward trending channel, but we're still inside the upward trending channel. And then we break out of this, you know, and that's what we're in right now. But we did break to the bottom of the upward trending channel, and now we're forming a little wedge right underneath it as resistance. It needs to break back above that. Otherwise, we could see a lower low here. We could just come back down and hit that little green dot that I have, which would make a double bottom right there, somewhere in this range. And that would be just in line with the same thing that happened here. Let's just forget that this happened, and let's just look at this from here to here. From here to there, and let's just look at this as a very similar
That's basically where we're at, right?
It's like where we're at. Yeah. So we're hoping for a breakout here, but we could break below. We could break below and do the same thing where we broke below, retested, and then dropped. Break below, retest, and then drop right to my little green dot. And then climb up and break out. And then finally climb up higher, hold support, and then finally go up. That would be identical to this situation.
And that's in or around 80,000.
Right here would be, yeah, right around we hit 80,500 here when we wick down right there. Boom. That would be a double bottom. That doesn't mean it can't go a little lower. Like this one, we had 3 lower lows. It did go lower than this one, but it was so close to previous resistance that it came down to test that first. Here, it could actually wick all the way down to in the 70s, or it could try, and that would still be considered kind of a double bottom like this one. But I would say the double bottom here at 80 would be pretty good. And this whole zone.
And that's in a macro scale, that's actually good, because then it's a higher high or higher low when you zoom out, right?
Yes. It is. This getting back up above this white line is kind of crucial though as far as the bull market is concerned. And we are close to doing it right now because we're hitting it as resistance multiple times, and we're doing it in a ascending rising wedge. And that is bullish. So we have bullish activity happening right under major support or resistance. And if we could do it now rather than come down here, that would be preferable. And that would make more sense, because if we come down here first and then bounce out, we still have to do it. We still have to get through this again. That would just be we're testing, fail, come back up, test, breakthrough. It just seems like it would be better if it did it right now, but I don't control that. We'll see what happens.
What would you estimate the timeline if it does break to the downside and the play out is that it's a double bottom there, and then we have to retest the white line of resistance there, right? What would you say the timeline? You think that would go into like mid-January, or
no? This would all happen before the end of this year.
Okay.
Yeah. Probably right after Christmas.
Sure. Yep.
Yeah.
Cool.
And if we popped all the way up December 31st, all the way up to somewhere up here by then, And then the next candle open on the 12-month time frame. Just go up and show you what I mean.
Hmm.
Here's the 12-month chart. This is the current candle we're in.
Hmm.
It went all the way up to here, which is 126. Right there. That's the wick. I got too many lines here. Let me get rid of some of these. You can see that long red wick. Let me get rid of this too. Long red wick to the upside there. That was the all-time high right there, 126. This is the candle we're in. This is the 12-month time frame. And if we go back to every bull market before, this candle was green. And then once that next candle started, that means this candle's printed. It's no longer active. The next candle starts. It was the beginning of the bear market. Here's the one before that. And here's the one before that. So we have bull market top, 12-month candle. 1, 2, 3, 4. Bull market top. Bear market 1, 2, 3, 4. Bull market top. Bear market 1, 1, 2, 3, 4. We are in the fourth candle now. This is the candle, and December 31st is the end of the 12-month time frame. And historically, I'm not going to say this time isn't different. This time could be different, but historically, whatever this candle ends was the top. I mean, I'm sorry, whatever the top was when this candle ends was the top. So this candle went all the way up to 1277, and came all the way down to 748 before it ended and this candle started. When this candle started, which will be January 1st, this one went up. So for the first few weeks, months even, maybe, it started to go back up, but it didn't make high, it didn't get higher than that. On this bull market, we went all the way up to 20,250. It came all the way down to 14,000. December 31st, bam, this candle started January 1st. It went all the way up to 17. Not quite as high as that, but then it fell. That was the bear market. Same with this one. This candle went all the way up to 68K, came all the way down to 45K. This candle up. So in other words, this is where we're at. We're somewhere in here, and we're only 2 weeks away from this candle starting. This candle went all the way up to 68K and came all the way down to 46. And then this candle started. That means that when this candle starts, that means that 68K was the top. But if you wait, well, you can't get in at 68K. Just like you can't go short at 126 right now because we're already down from there. But if this candle ends on December 31st, somewhere below the top, then that means 126 is the top of the bull market, at least historically. Now, if the next candle opens January 1st and then it goes up higher than this candle, which is possible, that will just be a first. That'll just be the first time that's ever happened. So when I talk about, and that could happen because this time could be different and we could have bear block moon, the bear market and bull market cycles could be over. All that's possible. But when I look at it, I look at historically and I say, based on history, on the 12-month time frame, bull market top, 1, 2, 3, 4, bull market top, 1, 2, 3, 4, bull market top, 1, 2, 3, 4. Every fourth candle, which means every fourth year, at the end of the bull market cycle, that's the top. Whatever the top of that candle was the top of the bull market. 1, 2, 3. So there's been 3 bull market cycles. 1, 2, 3. All of them, this candle was the top. And that's the candle we're in right now. So if the next candle opens and starts to go down, then 126 will be the top. If this candle, by the way, we have 2 weeks, basically. We have 19 days and 5 hours left to shoot up. And we could go all the way up to 170, 180 in this candle, then come down. And then the next candle opens, then that would definitely be the top. But I know it can be a little confusing, but if we look at this, guys, I can only go by history. I look at history and the data. That doesn't mean history is going to repeat itself, but it just has so far. You know what I'm saying? So we do got a couple weeks left, and then I'm personally going to make some decisions based on that. Maybe maybe in one account I'll do a short. And it also just depends on what happens in the short term. Over the next couple weeks, we don't have long to wait, guys. Over the next couple weeks, if we see Bitcoin come down lower or break the 80, break the 80 right here and go down to in the 70s, then to me that means that this 126 up here might have been the top. Might have. Now we have to stay above 70. We could come all the way to 70K and bounce and still get out of this. 70K is the magic number because that's the previous all-time high range. So as long as we're above 70, we're still in bull market territory as far as I'm concerned. Once we break 70, then to me that's bear market, and we probably could go as low as, anywhere between 30 and 60. But don't worry, we'll be shorting and we'll be growing our crypto or our USDT, one or the other, on the way down. All right, guys, it's 2. Get on the onboarding if you're new. I'm going to wrap it up. I've gone a little longer than I expected to, but right now, again, we are tight in a wedge and a breakout is imminent. It is kind of right there still. It's right inside this little wedge here, and we're just waiting for a direction, one or the other. We are going into weekend. Sometimes that's a little bearish. So if we break to the bottom, we could see that drop down to the 80K where Chad was talking about. We could even go a little lower down to 80. I mean, Chad was talking about like 83 or something like that, but we could go even as low as 80 here in this zone that I have. But if we break to the upside here, we could see a nice little pump to the upside. And that does sometimes happen on the weekends. More times than often than not, going into Sunday is a little bearish, but every once in a while we get a nice big pump going into the weekend. All right, guys, get on onboarding with Bill if you're new. If not, just stay, make sure your notifications are on in the Signal channel. If I see any changes, I'm going to post them. So will Chad. You guys have a great rest of your weekend. We're coming into a little bit of a holiday season here where a lot of people get complacent and they're not paying as much attention, but we'll be paying attention because lots can happen when no one's looking. And I think the powers that be and the big players do like to do that. They like to make their big moves when no one's paying attention. All right, guys, have a great rest of your day. If you have any questions, just ask it in the main chat or you can DM me. We didn't go over anything to do with nodes today, but it's really set and forget, it's kind of like one of those situations. So if you have a question or that, you can send me a DM on it or ask it in the ICO channel and I'll answer it there. All right. Have a great rest of your day.
See you, Nico.
See you later.